more than just business news, we're news for business people.
Good morning. You're watching DayBreak on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Alex Matthew. First, let's look at the headlines. The Nikkei and the Topics lead the sell-off in Asia, both trading with cuts of close to 5% after Wall Street posts its worst day in 6.5 years. The Dow Jones posts its sharpest intraday fall ever in absolute terms, falling over 1,175 points. US stocks erase all 2018 gains. Jerome Powell takes over as the 16th US Federal Reserve Chairman, pledges to support continued growth and price stability. Tata Motors' third quarter profit misses estimates by a wide margin due to lower sales in the US and European markets. Hero MotoCorp and Lupin are the two nifty companies coming out with third quarter earnings today. Let's turn to the big news update, and that's of course the international markets, with the US stocks falling the most in over 6 years on Monday, extending a steep sell-off from the previous session. For the Dow, the whopping 1,175-point fall was the most ever in absolute terms. For the S&P 500, the intraday loss was the highest since the US lost its top-notch credit rating. Bloomberg's Abigail Doolittle has this report on all the action there.
Monday's Wall Street session was all about a sell-off for stocks. The major averages fell in a major way. In fact, the Dow on the close shedding more than 1,100 points, its worst day since 2011. The S&P 500 also posting its worst day since 2011. The tech-heavy NASDAQ, its worst day since the Brexit. So lots of selling pressure, a continuation, in fact, of what we saw last week. Last week, the major averages each had their worst weeks since early 2016. This, of course, follows the big rally of 2017 and January of this year. Big rally conditions, lots of investors talking about the overbought conditions. They are reversing now. This really seems to be a matter of sentiment, confidence, the thought that maybe this rally is coming to an end. It's too early to really know that for sure, but investors locking in some profits on that possibility as the buyers really disappear and the sellers take control, similar to what we saw on Black Monday of 2015, the flash crash in 2010, plus the dark days of the financial crisis in 2008 and 2009. In fact, the Dow at the lows down about 1,600 points, shedding about 6% at that time, on pace at that time for its worst day since 2008, having, in fact, its worst 2 days since 2008. So again, just to give you an idea of the selling pressure, relative to some of the standout movers, Boeing, 3M, United Health, Goldman Sachs, Wells Fargo, all dropping in a big way. Boeing still up more than 100% on the year, giving the sense that that was some profit taking and a high flyer. Wells Fargo having its worst day since 2009. This after the Fed has penalized the company, basically issuing a cease and desist order until they prove that their business has been cleaned up from the fake account scandal back in 2016. And finally, if we go cross asset class, not surprisingly, haven assets rallied, bonds and the yen. The VIX, the quote-unquote fear index, having its biggest one-day spike ever, up more than 100%, well above 30. So fear is back in the markets. And again, Monday's Wall Street session was all about a stock market sell-off. In New York, Abigail Doolittle, Bloomberg News.
And this is how two market experts described the markets while it went down.
We saw the Dow go 7, 8, 9, 11, 14, 15 in a matter of almost prints, right? Yep. Not even in a matter of minutes. That is capitulation to me. That is where you finally see people that have been holding on, looking for the quick snapback, say, you know what? I'm out. I'm locking this in. I've seen this happen in the equity space. You know, I've been trading this for the last 25 years. Now, that doesn't mean we're going to see a quick snapback. It doesn't mean we're going to see these gains come right back in the marketplace. place right now. What it does signal to me is that now we're going to see this market kind of level off here. We'll probably see some sideways trade back and forth here. Again, we may see the market up 300, down 300 tomorrow, but in terms of the VIX and what that means, which we've seen almost 3 million option contracts trade today, I do think we've hit that point. We're going to see things settle.
Very fast moving markets. I have to think sort of what is the impact of algos and sort of, what part of this is human, what are folks really doing in the last, few minutes of trading, and what's the impact on markets. Over the short run, you could sell all you want. I agree with the last guest that fundamentally things did not change over the last couple of days. I think that we fundamentally misjudged the amount of volatility there was going to be in the marketplace. We spent 4 weeks saying nothing matters but faster economic growth. Then suddenly something else mattered, and that was going to be on the interest rate front. And that will help define the bottom if you simply don't see higher interest rates and you don't have a lot of the fears that were generated come true. You will have lower asset prices and you'll have better return.
Well, in other news from the United States, Jerome Powell was officially sworn in as Federal Reserve Chairman on Monday. Here's his statement after taking charge.
Today, unemployment is low, the economy is growing, and inflation is low. Through our decisions on monetary policy, we will support continued economic growth, a healthy job market, and price stability. I am also pleased to report that our financial system is now far stronger and more resilient than it was before the financial crisis that began about a decade ago. We intend to keep it that way. My colleagues and I will remain vigilant, and we're prepared to respond to evolving risks. We will also work hard to make sure that our regulation and supervision are efficient as well as effective. At the Federal Reserve, we know that our decisions matter for American households and businesses. Our long-standing nonpartisan tradition is to make decisions objectively, based only on the best available evidence. My colleagues and I at the Federal Reserve will put everything we have into serving you and our country with objectivity, independence, and integrity.
And the sell-off has continued in the Asian markets as well this morning. The Nikkei in Japan has lost over 4.5% in early trade, currently as much as 4.7% down. Let's go across live to Bloomberg's Rosalind Chin for all the updates from the Asian markets in early trade. Morning, Rosalind. Big sell-off.
Indeed, I think that actually might be an understatement if there's any word to describe it today, the rout that's been going on the markets. And yes, we are looking at the Nikkei heading possibly for a correction by the close today. That would be a drop of 10% from its high of 23rd of January, and it closed on that day at 24,124. So we're going to be watching that Nikkei very closely. Of all of this, of course, is the mid-concern about possibility of increased rates, especially, of course, in the US, and whether inflation will force those rates any higher. So the Nikkei stock average volatility index, we're seeing volatility going through the roof, climbing as much as 28% at one point, the most since August 2015, which, if you remember, was actually when China devalued its currency. And small caps, of course, in that market hit particularly hard. We're seeing the yen, the won slumping for a fourth day now towards what's gone past towards $1,100. Actually, now at 1,096.10 to the dollar. The yen is trading at 108.94. And across the board, we see the Kospi, Hang Seng's down by 3.3%. That just opened about 5-10 minutes ago. What we also are looking at, though, is mainly our investors too complacent at this point. We've got Peter Gamry. Now, Peter Gamry is one of the guys who called this correction coming up. About 2 weeks ago, he told Bloomberg that he saw that global stocks would be headed for a correction. He did say in the second half of the first quarter, so maybe timing a little bit off, but he also says that he sees the declines are likely to be short-lived. We also see Ray Dalio at Bridgewater Associates saying that he sees this as a minor correction, these falls as minor corrections. And Nader Naimi at AMP Capital Investors talking about the Japanese market, saying sentiment-driven corrections can be quite steep and quite painful, but I still maintain my conviction about Japanese shares. We have, however, Mark Cudmore here at Bloomberg, on Bloomberg Markets Live. He turned bearish last week, and he's basically been saying there is too much complacency. There are no bears out celebrating the pullback despite the warning signs. He said there's too much complacency and the slump will continue until the bears wake up good and proper. So we will have to consider. We'll have to see who is right here. Will this slump keep going, or is it just a correction and we will soon be back on the path? As many have said, because of strong earnings, because of strong economic growth in the world, back on the path of positive equity markets. At the moment, though, we're seeing everything in the red, and Mark Cudmore does seem to be erring on the side of a positive prediction right now. Back to you.
Right. Thanks so much for that, Rosalind. Let's turn to the Indian market now. Darshan Mehta and Agam Vakil are here as usual to set you up for the day's trade. Morning, guys. Darshan, clearly, I don't think there's consensus yet as to whether this is the bottom or not in the international markets. What are you picking up for India?
See, India over the past few days has been rather weak, and the story is the same. But it's even worse because the SGX Nifty is indicating a cut of close to 300 points. So that's a big cut of 3%. But if you look at it, what Japan is trading is down 5%, US was down 5%. So if we go by that consensus, another 200 points is something that could happen. So extremely weak open for our indices. Now let's take a look at the ADRs, and you can see all of them were down in trade. Tata Motors reacted to its numbers, extremely weak set of numbers, was down 5%. Probably will react in a similar way or even more as far as when we open for trade. HDFC Bank, ICICI Bank, Wipro. So with HDFC Bank and ICICI Bank, you can expect a big cut on the Bank Nifty today. Infosys, Reddy, Vedanta, all of them ended with deep cuts in trade yesterday. Now, crude again is trading weak for the third day in a row. Crude is trading down close to 1%. We've come back to levels of 63 on the WTI and 67 on the Brent. So probably we might just go below the $67 barrel per mark. But the closing on the LME as far as commodities was concerned was not as weak as it was anticipated. In fact, most of them ended with a positive bias. So you can see copper was up 1.7%, zinc was up 1.3%, and nickel was up almost 2.3%. Lead was the only one that was down. And even if you're looking at what's happening in China, there's not been a sell-off as far as commodities is concerned. Copper is trading flat, zinc is trading flat, aluminium is down almost 0.5%, and steel is trading flat in trade. So there's not much happening as far as commodities is concerned. As far as gold is concerned, I'm really surprised that despite a sell-off in equities, gold has managed to remain flat. Silver has also managed to remain flat. So that's the consensus view. Commodities hasn't seen a big sell-off in trade today. Now, as far as the fund flows are concerned, FI sold in almost 1,200 crores in the cash market, but DIs were net buyers. So on a net basis on this month, both of them have been net buyers. Now, yesterday, if we saw what we saw as far as the VIX was concerned, because the market was a little volatile, the VIX was up almost 5% in trade. So again, back to levels of 16. The other factors is the SGX, is the Nifty itself. The Nifty was down almost 0.8%, and it had performed the mid cap and small cap, which had managed to underperform the Nifty for the past few days. So probably again we might see a reversal, a sell-off probably in the mid caps and small caps is possible. Now the Nifty was down almost 95 points. What contributed negatively? Mainly the HDFC twins. L&T contributed negatively and ICICI contributed negatively. But Agam, 300 points down on the SGX Nifty. What are the futures indicating?
I think, Darshan, what we've seen yesterday may not matter in terms of today's day of trade. That said, I'm going to take you guys through what we've seen yesterday. In any case, with respect to the Nifty futures, we've seen a decline of as much as 4% in terms of open interest. That said, in terms of the Nifty bank futures as well, we've seen a little bit of a shorts taking place, while the index also was declined by as much as 1.3%. Moving in, what we're looking at is the India Volatility Index now at 16. This number is very likely to go up in today's day of trade, considering the kind of volatility we have seen across the earth. In fact, the global VIX, as I've been told, has nearly doubled from its levels. So it's up as much as 100% in today's day of trade. That said, moving in, well, while the PCR has fallen, or rather remained at around 1.09, this number is likely to fall further as we move, considering the fact that the benchmark indices also fall. That said, what we saw yesterday was a lot more unwinding around the 10,800, 900 and 11,000 puts, and a little more writing at around the 10,600 and 700 calls, the guys who wrote these calls are likely to see some amount of problems, at least in the first half of the session. So we are likely to see unwinding coming along in those options. Now let's take a look at some of the stocks where we have JP Associates, which has moved out of the ban. And among other stocks, Bharat Forge has advanced ahead with longs building in. On the other hand, we have shorts in counters such as the Ramco Cements as well as ACC. But today's job trade won't be as much about stocks as much as it will be about indices and perhaps FIIs pulling out money. We just have to wait and watch as to what repercussion that has on the entire market as a whole.
Absolutely, Agam, and not just the stock market, we're also talking about the rupee and the bond market and the impact that the international route will have on those markets. And for that, let's go across to Saloni Dhanuka. Saloni, one of the pictures that was very clear was the fact that investors sold in stocks and moved to bond in the US. Perhaps that's something we'll see as well in India.
Absolutely, Alex. Talking about Indian rupee first, it ended steady yesterday at 64.07 levels against the dollar after 2 days of losses. Now remember, the home currency did turn volatile during the day and touched a fresh 1 month high, 1 month low of 64.23 levels against the dollar. Now the CFO of Veracity Financial Services expects rupee to depreciate to 64.20 to 64.80 a dollar in the near term if it continues to trade above 63.80 mark. Now moving on to debt market, bond prices slipped yesterday, thereby extending 3 weeks of losses, while yields on the 10-year benchmark climbed 4 basis points to 7.6% after jumping almost 26 basis points last week. Ajay Manglunia, the co-head at Edelweiss Fixed Income Securities, believes that volatility in debt market will continue till RBI monetary policy review, which is tomorrow. While in terms of flows, global funds increased their rupee debt holdings for the 7th consecutive session. They infused close to 2,100 crore according to NSDL data. Well, on the global front, both dollar index and treasuries rallied after US stocks plunged the most since 2011 on concerns of faster rate hike coming in. While the dollar index climbed 0.4% against all of its peers except for yen, Japanese yen gained almost 1% against the dollar, while euro and pound continued to extend declined, and it dropped almost 0.8% and over 1% respectively against the dollar. Well, coming back home, dollar rupee is trading at 64.32 levels against the dollar in the non-deliverable forward market, which indicates a weak opening for Indian rupee in today's trade, Alex.
Absolutely. Thanks for that, Saloni. We'll keep you posted on all the live updates, so do stay tuned to Bloomberg Quint Live. There's also earnings to tell you about. Tata Motors was the big earnings that was announced yesterday. The third quarter profit for Tata Motors missed estimates because of lower sales in the US and European markets. Consolidated net profit was significantly higher, but that was on a low base. Revenue rose 16% on a consolidated basis. Yatin Mota sums up Tata Motors' performance in this report.
Well, the third quarter consolidated earnings for Tata Motors were weaker than the street expectations. The key reason here was that the tough conditions in the US and European markets, which clearly hurt the JLR margins. And also we had the older models which were phased out in the December quarter, because of which the discounting and the realizations took a hit. Of course, the domestic business was a silver lining. It posted a profit of close to 184 crores, and the strong momentum in the passenger vehicle segment and the commercial vehicle segment aided the overall domestic performance. Of course, the company says that the overall cost-based reduction and also the turnaround strategy is on track, because of which the overall profitability should move up moving forward. Also, if you look at the passenger vehicle segment, we have the new models, which have been doing extremely well in the marketplace, which include the Tigor as well as Hexa. But clearly, when it comes to the JLR performance, it was quite weak. The margins for JLR came in at a muted 10.9% versus the street expectations of 12.5%. The only silver lining being the robust performance of the domestic business.
Well, one of the big companies announcing their results today is Lupin, and Lupin is likely to report a drop of 11% in its third quarter revenue. However, the domestic business may grow on a low demonetization base. Let's head across to Darshan Mehta, standing by with more details. Darshan, some pain in this quarter for Lupin?
Yeah, Alex, absolutely. Pharma companies have been going through the worst phase currently, and they've all guided for weak growth. So as far as Lupin is concerned, 11% top line degrowth. Profit will fall by almost 33%, and margins will come in close to 21.2% versus 27.1%. Now, basically, it works in three regions. India, we're seeing a growth of anywhere between 10 to 15%. US may see a drop of 35 to 40%, and Japan may see a growth of 20 to 25%. This is all on a year-on-year basis. Now, both formulations and API are expected to see downtick. Certain of their products like Glumetza, Fortimate, Ministrin, all of them will see price erosion as well as competition. The domestic business is expected to grow on the back of a weak quarter of demonetization, and they're coming out of the GST quarter. There will be an overhang as far as their warning letter is concerned, as far as future approvals is concerned, and that is why their remediation cost will go up significantly. So overall, expect a weak quarter from Lupin this time around.
Thanks so much for that, Darshan. Now, the other big company that we're talking about with regard to earnings is Hero MotoCorp, the largest two-wheeler manufacturer in the country, will report its third quarter numbers today. And perhaps one of the key points to look at is its outlook on rural demand. Yatin Mota filed this report on the preview.
We are expecting a stable third quarter for Hero MotoCorp, wherein we are looking at a 14% revenue growth. Also, if you look at the profits, we are expecting a 14% kind of a growth. Profit seen at 820 crores. This time the margins will be under pressure. We are expecting margins to be at 16%, down 100 basis points year on year. And profits will be impacted because of higher discounting that we saw during the quarter. Not only that, higher promotional expenses, adverse product mix are the few reasons why we are expecting profits to remain under pressure. If you look at the overall, commodity cost also, that is higher during the quarter, because of which, again, there will be some bit of margin pressure which we could see. Of course, the management commentary on the rural, demand outlook is something important that we'll be watching out for. Apart from the earnings, net expect a stable quarter for Hero MotoCorp this time.
Right. So clearly, those are the two stocks in news. But as we told you earlier, it's more about the benchmark and where it's headed. But still, you need to know about the stocks in news. So Shraddha Babla joins in now with all the stocks that are buzzing in the news. Shraddha, what's on your list today?
Alex, to start off with, Bharat Forge and RK Forgings are now, this is on the back of the North American Class 8 numbers that were released yesterday. So the North American Class 8 orders were at 47,200 units, up 28% on a month-on-month basis, and more than double on a year-on-year basis. In fact, these truck orders were at the highest level since 2006, so this is definitely positive for those two companies. That apart, Imami will acquire 26% stake in beauty care brand Brillar Science through compulsorily convertible preference shares. Now, they haven't disclosed the price at which they have bought these preference shares because of reasons of confidentiality, but I'm assuming it's a smaller number because the turnover for this company for FY17 was just about 13 crores or so. You also have Moil India, which has approved a share buyback at a price of 240 compared to the closing price of 230. La Opala might see some reaction. The board has approved a 1:1 bonus. You also have an ET report which says that Biani is exploring a tie-up with Amazon. In fact, he has apparently spoken to Bezos after meeting Alibaba for tie-ups. So additionally, Future Consumer will also consider a proposal for raising funds via debt and equity issue on Feb 8. So overall, Future Consumer and Future Enterprises, the Future Group companies, could remain in focus today. That apart, Uttam Galva Steel is another name. Now, according to a ET report, ArcelorMittal is looking to exit the company. Why would they do that? Because the stake sale will end the related party and co-promoter status and make ArcelorMittal eligible to bid for SR Steel and Bhushan Steel. You also have a Business Standard report which says that they've already exited Uttam Galva Steel. We're trying to get more clarification on that, but watch out for that name. That apart, you also have two bulk deals. You have Shelly Engineering Plastics, in which Ashish Kacholia has bought 3.5% stake, while Bengal Finance and Investment has sold that stake. And you have PC Jewelers. This has been a stock which has been in focus since the last week. Now, Fidelity Investment Trust bought 1% stake in the company yesterday. So these are some of the stocks to track.
Thanks, Shraddha. Now, moving on to an exclusive interview that we have, former Finance Minister P. Chidambaram has raised the red flag on the widening revenue deficit. He said that the government's additional borrowing plan is not being used to spur growth, and instead it is only adding to the revenue deficit, which will have serious consequences on the economy. Here's a part of his exclusive interaction with Bloomberg Quint as part of our series Rajpath.
Fiscal deficit limit has been breached. The revenue deficit limit has also been breached. They are borrowing this year this year means 2017-18, 3.5%. They should have borrowed 3.2. That 0.3 is an additional 54,000 crore. You must add the 37,000 crore which ONGC borrowed and gave it to the government. That is a device. So 91,000 crore is the additional borrowing. I'm not even counting the 80,000 crore for recapitalization. Keep that aside. I want to know where this 91,000 crore went. If this 91,000 crore had gone into investment, maybe I will say, all right, you're borrowing for investment. This entire 91,000 crore has gone into the revenue deficit. You've spent your money.
And how bad is that?
It's quite bad. I think the revenue deficit is about 2.6 or so, isn't it? It's bad. Your 91,000 crore of additional borrowing is going into the revenue deficit.
And non-tax revenue government doesn't seem to be convinced for bold and clear measures. It is pocket-to-pocket transfer.
Well, the 37,000 crore is an ONGC gift to the government. The RBI shut the door and said, sorry, we can't give you any more because demonetization has cost us a huge amount of our profit. Now their dividend income from PSUs has come down. They've got disinvestment. Other receipts, they seem to have got more. But that again is inflated by 37,000 crore. They have not collected 1 lakh crore. They've really collected only 63,000 crore. Therefore, they've run out of ideas. They run out of gas. They're stepping into the 5th year. They've run out of gas. This car will break down sometime this year, or it will come to a stop at the end of the year. And for that, we must thank God.
So one big constituency that is really very worrisome for BJP is farmers. And the kind of stuff with MSP this budget is trying to do you think it will work?
What have they said? They have said in the 5th year, please remember, for 4 years, they were sleeping like Kumbhakarna. 5th year, they wake up and said, we're going to give you cost plus 50. The Rabi is over. The Kharif is coming in September, October. So whatever cost plus 50% you give will only be effective for the Kharif crop, which is in October this year. Nothing between now and October for the farmer. And then you say cost plus 50. Dr. Swaminathan, Dr. Ashok Gulati, many other experts have asked, which cost? There is C1 plus family labor. There is C2, which cost? You don't tell us which cost you're going to take into account. And then you say, we have already given cost plus 50 for some crops. So which crops have you given? So all this is bluffing. Come out with a concrete paper telling us which cost, which crops, when you will give, how you will calculate. Give us a complete cost data. I mean, there is something known as cost accountancies in this country. You hire a cost accountant and tell us how the costs are worked out, and then we'll tell you. If we have already given cost plus 50 for some crops, why is there so much farmer distress?
But this will also, now people are talking about, it will increase the inflation, CPI. So what will happen, if we want to sum up this conversation, to inflation and to interest rate, and then again investment, and then growth?
See, the fiscal deficit rise itself will increase inflation. In order to make exports competitive, the economic survey says that the rupee is overvalued. So if you allow the rupee to slide downward, that will also increase inflation because
well, it's a sea of red across international stock markets. How will India open and what do you need to know going into trade? Do stay tuned to find out. Thanks for watching.